Ladies and gentlemen, welcome back to the channel. We're going to get into this video straight head on with this article. Now, this is all about the technical levels of AMC stock. And what is said in this article suggests that AMC is very rapidly going to head up to the 200-day simple moving average, which is almost $7 per share. And we'll get into some of the technicals here in this video. We're also going to get into this situation of Antara Capital buying puts on AMC. Now, why are they doing this? I think that is very telling and very interesting that you guys should at least hear my opinion on. Now, let's get into all of this information. I really don't want to make a long intro for you guys. I want to jump straight into it. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So we got a couple articles to get into. I think this one is the most informative on relative price action of AMC that I want you guys to hear because it's exceptionally bullish and it highlights everything that we've talked about in the last couple of videos. Now, it says AMC Entertainment pops higher on Q1 earnings. What to watch as the stock heads towards key level. Zinger, key points. AMC regained an important level at $5.74 on Thursday, and on Friday back-tested the area as support. Bullish traders want to see the stock continue higher to test the 200-day simple moving average as resistance. Okay. Where is that simple moving average? Where's the 200-day moving average at right now? Well, it's at $6.83 per share. And right here, it suggests $6. Oh, it just updated. $6.83 per share. That is a rally of, get this, about 15% from here. So that's a pretty big forecast, coming from one of these articles. A lot of stocks don't move like this. Let's keep that in mind. 15% might not sound like a lot, but if you're talking Microsoft, Apple, Google, or any other name, 15% is quite a lot. Now, to test resistance there, it could go much higher, as this article does kind of go into as well. Now, it goes into AMC earnings, talking about how they were better than expected on the revenue numbers. AMC reported a loss of 17 cents per share on revenues of $954.4 million, which came in above the consensus estimate for a loss of 16 cents on revenue of $941.93 million. And it says, notably, attendance grew during the quarter, rising 21.9% year over year to nearly 48 million. Heading into the event, AMC on Thursday broke up above heavy resistance at $5.74, which Benzinga called out on Wednesday. On Friday, AMC back-tested that area, which has now become support and bounced up from that level. Let's go ahead and take a look at what they're talking about, right? 574, right? You bounced right up from that level. You broke under it on May 2nd, came back up above 574, pretty easily closed above that on May 3rd, and it's been off to the races ever since. You came down and really got rejected just within about an hour time frame right here. This is 30-minute candlesticks, and you dipped above, or under this, I should say, under 574 for an hour, and then you rallied straight back, again showing signs of solid support, as this article is telling, right? It's a fact. You're seeing solid support right now. And considering AMC stock just reported earnings, this would be the time where shorts would double down on those positions, on those short positions heading into, what could be the next couple of weeks, which could be bearish in theory with AMC. Now, typically, if you guys have watched the last video, it's not. Typically, AMC stock does rally about 50 to 150% after earnings. That is about 80% of the time. So odds are ever in your favor. If you have ever watched the Hunger Games, the odds are in your favor here. And that is kind of what makes a great trade. Now, let's get into a little bit more of this article. So it says the AMC chart. AMC reversed course into its most recent uptrend on April 24th. Well, where is April 24th? Well, that was that hammer candlestick that we've been talking about quite a bit here on this channel, that we literally called out that same day. AMC stock has rallied about 27% since then, considering today's drop that you've seen, well, Friday's drop of about 0.5% and 0.34% in after hours, right? So pretty well on consensus there. Now, it says AMC has printed a constant series of higher highs and higher lows. The most recent higher low was formed on Friday at $5.66, and the most recent confirmed higher high was printed at the 574 mark on Tuesday. On Thursday, AMC formed a doji candlestick, which can indicate the local top has occurred and the stock will trade lower Friday. In AMC's case, the doji indicated indecision heading into earnings, and when the stock dropped lower briefly Friday, bulls came in and bought the dip. Okay, you got a doji candlestick. Not to confuse anyone with Dogecoin, a doji candlestick. That would be right here, right? Where you kind of get a wick on both sides pretty large, pretty equivalent on both sides. The stock really doesn't know where it wants to go. And then boom, you come in and what? The bulls came in and bought the dip. That's why you get this very low wick. This low wick right here on Friday was the low. And it got bought up almost to the top of this candle. And if we go ahead and look at the 1 minute, take a look at Friday, this wick was down here and you ended up closing way up here, right? This low wick at $5.66. Again, another key level this article has called out. You ended up closing almost 5% higher than that lowest wick, right? Literally like 5% higher was the close from there. So showing strong demand for AMC stock heading into the close. Now it says AMC also backtested the 8-day exponential moving average on Friday and held above the area, which is bullish. The 8-day EMA is trending above the 21-day. If AMC continues to trek higher, the stock is likely to at least find temporary resistance at the 200-day simple moving average. So next stop could be at least $7 per share. Now, what we have seen in the past with AMC is that 200-day moving average tends to be a very sticky level. If you don't get rejected from there, you tend to move exponentially higher. Now, typically you do get rejected at this level. The last time that we have not gotten rejected at this level was May of 2021, before AMC stock rallied 10x in value in June of 2021. You guys can see if you follow this teal line right here, you got rejected in March of 2022 after AMC stock had rallied about 300%, maybe $7 to $21 per share, roughly 300%. Back here, you got rejected, not as clear, right? You kind of rallied after this a little bit, relatively speaking to AMC's rallies. It is a little bit, but what was this? This was about a 30% rally after breaking the 200-day moving average. You got rejected back here in December of 2022. You also got rejected back here in February of 2023. And now you're heading back up to that level. So I think this level will be huge, because if you don't get rejected, that's where shorts really start to get squeezed. And I personally think above $6 per share, shorts are really getting squeezed on their short positions. But if you get above that 200-day moving average, it gets ugly very, very quickly. And I think that's kind of not a good thing for shorts here. Now, let's talk about this other article. It says AMC eyes 2023 Hollywood box office boost after Q1 revenue beat. The company's stock was up 1.4% when this article was written. It says, quote, "There is just an incredible array of really great movies that are coming out between now and Christmas of 2023, CEO Adam Aron said during a Friday conference call to discuss the company's fiscal first quarter results. In its earnings release, AMC highlighted forthcoming movies such as Marvel's Ant-Man and the Wasp Quantumania. I still don't. I've said this probably 10 times now on the channel. I don't know if I'm saying that right, okay? Creed 3, Scream, Shazam! Fury of the Gods, and John Wick Chapter 4. Amongst the movies coming later this year, Aaron noted Martin Scorsese's Killer of the Flower Moon and Ridley Scott Napoleon as particularly significant during the earnings conference call. The CEO explained that the two movies from Apple original films will be released exclusively in cinemas before streaming on Apple TV+. Last month, Amazon Studios' Air, which recounts the origin of the iconic Air Jordan basketball shoe, was also released exclusively in cinemas. It will be streaming on Amazon Prime on May 12th. Quote, "These initial releases by Amazon and Apple could just be the tip of the iceberg of new content for AMC," said Aaron. Quote, "There have been numerous press releases that these two tech giants each plan to spend about $1 billion per year on movies that will be handed first to theaters prior to going on streaming platforms. We can't wait to showcase their films." The CEO also discussed the potential impact of the writers' strike on AMC. "We're very sympathetic to the real problems that exist for members of the Writers Guild," he said. Quote, "We are hopeful that the Hollywood Producers and Writers Guild can work in good faith to craft a solution that's good for all parties. The impact of a short strike that lasts months rather than days will mostly be felt on television programming," according to Aaron. "The movies for 2023 and 2024 have pretty much been written. In many cases, they have already been filmed," he said. "Only a very prolonged writer's strike would have material impact on the movie theater industry or on AMC. During the first quarter, more than 47 million guests visited AMC theaters worldwide, up from 39 million in the same period last year. 47 million, quote, 47 million guests stands in stark contrast to the naysayers and doom tellers, Aaron said in a jab at the company's critics. Come on, I know Adam Aron does a lot wrong. Let's be real. Let's be real here. He does a lot wrong, okay? But he does call him out too, okay? Like, what the duck, Robin Hood? Hey, you don't think I forgot about that? What the duck? What the duck is going on here? What the duck is going to happen with AMC stock? Let me know what you guys think down below in the comments section. So a couple pretty interesting articles here. Obviously, I know a lot of us just want live stock trading news, all that good stuff with AMC stock, and it looks like AMC is going to go higher, right? Benzinga's talking about it. I'm talking about it. Basically, everyone else is talking about it. It's probably going to happen. I don't think that's a stretch. Typically, AMC does rally 50 to 150% after earnings. This is not like it would be a huge surprise, let's call it that, if AMC stock did rally big from here. But you gotta remember, and I cannot stress this enough, if you are in short-term trades, the court date will triumph any price action we see in AMC. I don't care how bullish or how bearish AMC is. Once you get an update from the courts, which will come in the month of May, at some point, I don't know, beginning of the month, end of the month, it will come some point in May. That news will be bigger than earnings, will be bigger than everything else that we have seen so far. Because you're going to get a new ruling from the judge at some point in May. Is there going to be a revote? Is this settlement going to be agreed upon? Is this reverse split not going to happen? All of these things are a possibility. It's all in the court's hands. So keep that in mind if you are trading AMC in the very near term. I know a lot of us are just buying and holding. Some of us do trade near term, call options on AMC. And I'm not going to endorse that, but I've been doing that. So I can't say that you're wrong for doing that. There's a lot of potential here when we're talking about AMC stock potentially rallying almost 30% to the 200-day moving average, and it could go higher than that. I get it. You want to trade some options, but be fully prepared, to see big moves based off of this court case that will come literally at any time. It could come on Monday. It could come on Sunday. It could come 2 weeks from now. You just got to be careful there because I don't want you guys to lose money unnecessarily if you don't have to, right? Based off of something short-term like options. Now, on top of that, let's get into this. Antara Capital. What are they doing? This brings us to an SEC filing. So these are puts. And they did go ahead and bought 6,374,000 puts of AMC at the $6 strike for that expiration date of June 16th, 2023. They also bought, again, $6 puts, 12,750 for that June 16th, 2023 expiration as well. So controlling here almost 2 million shares worth of AMC. Now, there's a couple reasons why they might do this. Now, if you go out and outright buy a put, then you're betting that the stock will go down. Now, on the other hand, they might be able to convert APE into AMC a little bit easier than we might think, or be able to use the same kind of leverage here to kind of make this trade. Now, I don't think they're obviously selling this put. It looks like they are opening this put, and they might have to sell some stock in AMC because ultimately what buying a put is artificially shorting the stock. So maybe they need to get their hands on some shares to go and lend out. Maybe they do want to be short on AMC. That's always a possibility as well, even though I think with their massive exposure to APE, it doesn't make a whole lot of sense. It looks more like potentially, a hedging strategy by lending out stock or by outright selling more stock. That's kind of what I see going on here. It's hard to draw a definitive. Maybe they're just really bearish all of a sudden on AMC when things look to be more bullish than ever. Maybe they are the someone somewhere that knows something about this court date. But I've been seeing this amount or number of price of derivative security. Oh, okay. So they bought these at $127. That's a lot. That is a lot, actually. So they bought these $6 puts. I'm just seeing this now, so apologies for the reaction there. These $6 puts, they spent $127 on these. That means their break even is $4. 69 cents, 68 cents, $4.68. That's pretty dang bearish if they are buying these puts. That looks like a foolish trade to me. Now, when you're really looking at that, that looks like by June 16th, that expiration just don't even make sense to me. So they obviously have a different reason why they are making this trade. Maybe the latter of what I said. Maybe they're just trying to get their hands on some shares to lend out some stock to hedge out their current position, because that is a terrible trade. Maybe Antara Capital is just worse than we thought, but that is bad. Oh my gosh, that trade's never gonna hit. It's never gonna be a winning trade unless we get some really bad news from the courts, but before June 16th, and I highly doubt that is gonna happen. Ugh, that's an ugly trade. I would not want to be a part of that. Okay, but nonetheless, let's give you guys a rundown of the Ortex data. So the short interest value amount of $773 million, estimated short interest of free float at 25.29%, 33% free float out on loan. If we take a look at the live cost to borrow fees, currently cost to borrow average of 334%, cost to borrow max 339.1%, cost to borrow minimum 269.25%. Interactive brokers short availability is at about 3 million shares, cost to borrow rate at about 177%. So some pretty encouraging numbers that we're seeing here. But what can we draw from a conclusion of all of this? Well, AMC stock probably going to go higher from here. Don't be surprised if the stock does go higher. It typically does 50 to 100% of a rally after AMC earnings, about 80% of the time. So, you know, two out of 10 times it does not go higher after earnings. That's a pretty good ratio. That's what I would be willing to put my money behind that. Even articles like Benzinga are talking about that same thing, and the data certainly looks like you could be prone to seeing a short squeeze. But the bottom line here really is the next update from the courts is going to be what drives AMC. And I think it's pretty clear here that the special mastery is going to have a very big impact on what Morgan Zern does do, because she's not going to look through all of these letters. Maybe she looks through some, but that's what the mastery is for, to make her recommendation. The judge is going to listen to that mastery's recommendation. And that recommendation is going to be that shareholders are not okay with this settlement. If you are or not, I'm just telling you, that's what is going to come out of this. That's the bottom line. They're not okay with the settlement, number one. And there's going to have to be some kind of reformation here, right? Either a revote of common stockholders. I think that is more likely. This reverse split does not go through. It is deemed as an illegal vote. Or a larger settlement. I think you probably get common stockholders that have an independent vote on this matter, and that will create fear, uncertainty, and doubt in hedge funds. That will lead some hedge funds to cover on their short positions, ultimately very likely causing the MOAS, guys. So that is going to do it for this video. We covered a lot of ground in a very short amount of time. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video. We don't bring on sponsors here on this channel. A lot of people trying to sell you some bad things out there. We're not going to talk about that, but we will sponsor ourselves with the trading community down below in the description of this video. Thank you guys for watching, and I will see you in the next one.